Welcome to this week's Market Matters weekly video update. Today is Wednesday, March 16. I'm Harry Watt, joined by James Gerrish. We're going to keep this one short and sharp today, James. I know that's pretty hard for you at times, but we're going to cover some big picture sector views and maybe some little stock picks underneath that. So we're going to rattle through a couple of sectors in the market, kicking off with one of the biggest sectors on the ASX, key mover, key driver of how the ASX performs, the commodities. It's been all over the shop of late. Where do you see the commodities index, the commodities sector going from here, James?
Yeah, it's certainly been volatile. There's no doubt about that, Harry. We obviously had we've had what's played out in the Ukraine and Russian situation. That's driving commodities into what we think is probably a panic high. So, we were reasonably heavily set in commodities based on the supply side issues prior to Russia and Ukraine. That's obviously amplified it. So we've taken this opportunity to lighten our load. So we've been a seller of commodities overall. We're now underweight the space. We've still got some exposure there, but we've been net sellers. So at the moment, net sellers for now, but we would look to re-enter at lower levels. We wrote about a couple of stocks in the market this morning in the commodity space, Oz Minerals, etc. Whitehaven Coal is one that viewers will know that we really like, and we haven't taken a longer term bearish view on commodities. We've taken a shorter term tactical view to lighten the load to buy in at lower levels.
Definitely. The other sort of barbell of the ASX is the banks, big sector on the ASX index. CBA has sort of gone about its business quietly in the last week or so. It's up about 10% this month to date, up about 8% just in the last week or so. Sort of where are we positioned with the banks and where do we see them going from here?
Yeah, written about it a few times in the last couple of morning notes. We're bullish on the banking space. Seasonally really strong time for the sector, going into three of the big four going ex-dividend very shortly. So CBA is on a different cycle, but the other three majors going ex-dividend. We've written that we might buy one of those, so ANZ or Westpac. They're the relatively cheap names in the space. Collect the dividend and perhaps leg out of CBA. CBA is sort of like, if you want the defensive, safer, higher quality business in the space, that's CBA. But if the market gets bullish, which, if we get some resolution out of the Ukraine-Russian situation and a few other bits and pieces, then the market could well turn bullish. You want to be in the others, is that they've got more leverage. We also own Virgin Money and Macquarie in our banking allocations, Harry.
Definitely. Talking about more sort of broader financials, insurance is a big part of that. Obviously, the devastating floods we've had recently sort of weighed on the insurance sector as a group. Your take on insurers and broader financials from there.
Yeah, we did a piece on the insurance sector. I think it was last week, and just whether or not these floods created a low in their insurance space opportunities about. It's a hard one. These, like, Suncorp, IAG, QBE, they've been chopping around without being in any defined trend for a long time now. QBE is a really, they often disappoint. They've got the macro tailwinds of rising rates, etc. If our view is that probably the market's got ahead of itself in terms of interest rates, bond yields, etc., then we wouldn't be a buyer of QBE. IAG, Suncorp look half okay for income portfolios, but we haven't bought any, and I don't think we will buy any in the immediate term, Harry.
No rush there.
The other thing I'd say, just in the diversified financial space, is Macquarie. It's pulled back. We do own that, and I alluded to Virgin Money. We've also got Insignia Financial, IFL, in our income portfolio. That had a really good week last week, and that's. I think that's a really strong turnaround story. Magellan this morning came out with an on-market share buyback. That stock has popped. A long way to go there, and a lot to repair confidence, but it's a start. Yeah. So the diversified financial is an area we like.
Definitely. Technology has been probably the one sector that's been sort of blown up in recent months, while the ASX has sort of held up okay. Do we see sort of a low in technology forming around here, James?
If for a contrarian investor out there, tech, everyone hates tech now. Everyone is very bearish on tech. We've seen it, particularly Asian-facing tech, Alibaba, JD.com, etc. Some of these stocks, we actually own them in our international equities portfolio. They've hurt our performance in the short term over there. these are, in my view, I think they've hugely oversold. The market's turned bearish. This will improve, and the focus or the positivity around tech will improve, I think. So I guess what I'm saying is the market's overly bearish the space. The elastic band's stretched too far to the downside. It'll bounce and bounce hard. So like commodities, we've eased off from a tactical standpoint in the short term. We're medium term bulls. In the short term, we're tech bulls, medium term bears. So a little bit of a different nuances there between those sectors.
Yeah, definitely some trading opportunities popping up there. It's a big sector in terms of what it covers, the industrials. It's not a huge sector in terms of its market weight, though. Is there any specific sort of niches in that industrial sector that you're looking at the moment, James?
I like Aristocrat down at these levels. That's pulled back in recent times. Like Woolies, we've just recently added that to our flagship growth portfolio. Woolies in a growth portfolio might seem a little bit strange, but it's come back to really attractive areas. Wesfarmers actually looks pretty good down at these levels as well. G8 Education is in that space as well, so we've added that to the income portfolio. So there are a few names in the industrial complex that we like at the moment, Harry.
Definitely. It's not a sector, this next one, James, but it's a bit of a curveball for you. Small caps in general, where are you sort of finding pockets of value?
If I had some risk capital that I was wanting to buy a few stocks in the small cap space, a lot of the payment stocks have been belted. You wrote about Tyro this morning. I'll be a buyer of that down at these levels. A couple of the beaten up plays like DUB, higher risk but higher reward as well in those sorts of stocks. We've got Praemium in the portfolio. We've got Hub24 in our large cap growth portfolio. We really like that platform business. Praemium has been under the pump. It's around 70 cents. They did have a bid, correct me if I'm wrong, about $1.40. Yeah. So there's reasonable upside, I think, in some of these beaten up small cap financials.
Definitely. Praemium, that sort of space has been under a bit of consolidation there. Praemium didn't go ahead with that bid, but I imagine that will continue anyway. Interest there. We tried to keep it succinct today, James. I think we've done an all right job of that, considering your track record, but that'll do for that today. Thanks for joining us, and keep an eye on our reports going forward.